This was actually my first proper podcast in maybe 3 years. The fundamentals of Bitcoin are just like so solid. If you take a long time frame, and I'm talking over a 10,000 year view, it's happening so fast. It's like a phase change. And that's what we're looking at, a 0 to 1. We went from 0 and we're currently at 0.05. We're like just under 5% worldwide adoption of this asset. The question is how long before fiat blows up?
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey everybody, welcome back to the Bitcoin Frontier podcast. This week we have on Willy Woo. Willy, welcome.
Hey Joe, happy to be here. This was actually my first proper podcast in maybe 3 years. I've taken kind of a few years out with a new family and so forth, so it's kind of an auspicious occasion.
Yeah, absolutely. I'm glad that you decided to return from your podcast hiatus to the Bitcoin Frontier, so appreciate it.
Absolutely.
Cool. Willy, let's just dive right into it for the audience. What are you thinking about right now? Like, what are your thoughts on the current state of the Bitcoin market?
Oh, that's a broad one. Yeah, it's quite every cycle. If there's one thing you can trust is the changes, and so that hasn't changed. That I'm like looking at, what has changed with this market. Obviously, we had in the last cycle, MicroStrategy coming in with corporate treasuries. Futures was a big part of the last cycle. And institutional hedge funds coming in. And so I think this cycle, just looking at the impacts of I think the key impacts right now, MicroStrategy going on full flight on their Bitcoin acquisition, and then the BlackRock, in particular spot ETF, but the whole broad collection of spot ETFs coming in and offering a very efficient way for TradFi to buy in. And so that's really changing the structure of the market. So looking at that type of impact, and you can see also, and looking at just how heavily hit the altcoin space has been with so much capital coming into Bitcoin, not necessarily rotating into altcoins, and just how absent retail has been in this cycle. I mean, it looks like they're just starting to come in the last 4 or so weeks. But it's been a ghost town. So yeah, just very interesting to see how much of each, the structure of each cycle is changing. And probably the hidden side is I'm kind of trying to figure out if more of the sovereigns will come in, and maybe they are coming in, but quietly. So
yeah, I want to touch on a lot of those topics in more detail. The part that you brought out of altcoins underperforming Bitcoin, I think that is kind of interesting. It seems like potentially some people are resorting to buying like MicroStrategy derivatives, like those 2x long MicroStrategy things, or maybe even like Bitcoin ETF options. Do you think that's taking some thunder away from the altcoins, or is it just retail's not here yet and they're just taking their time?
yeah, I actually do think it's taking it away somewhat for one sort of class of investor that's got the brokerage accounts, probably much more experienced. It used to be if you wanted to get a gain on Bitcoin, you've got two options. One is to take leverage risk and risk liquidation, or you rotate into altcoins, particularly when it was a bullish setup and Bitcoin was sort of tracked under resistance. People would rotate into altcoins to get that extra pump, extra beta. And you're not seeing that this cycle. And if you look at you rotate into altcoins because you get extra gain on Bitcoin historically with no liquidation risk. Effectively buying something like a MicroStrategy or a MicroStrategy on 2x is producing the same sort of like, zero liquidation risk environment, but if anything, you're getting the same kind of, magnified returns if you time it right.
Yeah, I definitely agree with that. And it kind of seems like with altcoins, there was always like you were hoping for a greater fool to inevitably buy your bag. Whereas like with MicroStrategy, like Bitcoin is the exit. So like there is no better asset to cash out into. It's like maybe it's more positive sum to be betting on like Bitcoin with leverage via something like MicroStrategy rather than if you're doing altcoins, it's like everyone kind of knows there has to be another greater fool. So they're like, why would we play that game anymore? Do you think that's some of the case as well?
Yeah, I mean, it's you got to still be careful with MicroStrategy, because there is that kind of premium to NAV, like the underlying Bitcoin valuation, and so that could completely collapse if you think that you're buying it at a particular price, whatever it is. Let's say it's $450 and it's trading 3x its underlying Bitcoin valuation, then you're gonna get a 67% pullback if the market turns bearish. So at an extreme case, so that's kind of similar to what you're going to get on altcoin. At least that capital is going into the underlying asset of Bitcoin, which is driving the entire ecosystem, and it's not being siphoned off into 10,000 projects, of which probably only the top 5 or the top 1 or top 0.1% are actually going to execute in a way and produce something productive.
Yeah, that makes sense. Let's dive into MicroStrategy since you brought it up some. Like, how are you thinking about it? There is the multiple to the net asset value of the Bitcoin that they hold in their balance sheet. Obviously, that's been highly criticized by, so many people. And then also some people are saying it could go higher. Where do you stand on that? Like, I tend to agree, like you mentioned, like if it's a bear market, then, it's going to get crushed. But if it's a bull market, maybe it remains the same or goes higher. Or what do you think about it?
Oh, there's many lenses you can look at it. I mean, I'm looking at it at a few. Like initially, maybe earlier in the cycle, I was thinking, look, you can buy an ETF or you can buy MicroStrategy, and an ETF is going to charge you maybe 20 basis points or something like that per year, 0.2% to hold it. So you work that over a 20-year hold. A fair percentage of your Bitcoins are going to be lost to management fees. Whereas you could buy MicroStrategy, and with a long-term hold, it's still got a profitable business, though that's a very small part of the AUM now. And they're going to stack sats. Number 2, they're in a situation where they can get almost next to free borrowings to buy Bitcoin. And now they've got this at the market offering where this new mechanism where as long as it's selling at a premium, they can buy more Bitcoin, issue stock, dilute the stock base, and effectively, as everyone knows, use that cash to buy Bitcoin. And that has a interesting impact because the amount of, as you're trading at a premium, it means there's a lower amount of Bitcoin per share than ideal. And as they issue more stock and use that cash to buy more Bitcoins, it's anti-dilutive, and the concentration of Bitcoin per share increases. And so it's kind of, it sounds a bit Rube Goldbergish as a machine, but if you look at the underlying of it, like the mechanisms, it's just opened up this completely huge gateway for fiat investors to convert into Bitcoin through this machine that concentrates more and more Bitcoins per share over time. And so I think that's the second reason why it's getting an increasing premium. And you look at that premium, it went from under 1 at the bottom of the bear to now consistently touching around 3, and it's a straight line up. And then if you look at what's happening next year with the stock, is that MicroStrategy is going to move to FASB accounting practices, where their gains on Bitcoin is considered a net yield or revenue, in which once you trip over that criteria, you are now allowed to be listed in the S&P 500, and all that prevents it from being listed now is a committee decision once this accounting practice goes in. And so by the start of next year, there's a lot of people speculating that it will be listed on the S&P 500. That index is an incredible amount of money. It's, offhand, Joe, what the S&P 500 is?
I know passive index funds as a whole are probably close to like $10 trillion, but like the S&P 500 in aggregate is obviously like more than that.
I think I did the numbers there. 40% of the S&P 500, those companies invested through that index with passive funds. And so it's a big proportion of the trillion. And if you work out the numbers with MicroStrategy, I need to look into it. I've got it on my Twitter feed. It's a decent amount of numbers. It's not quite the number, but it's a big number in relation to MicroStrategy's current market cap. And so there's this behavior that happens as a company lists up on the listing day for months prior. There's a run up in price, and then on listing, it sort of goes sideways. So there's some amount of hedge fund activity that's front running the listing. And speculative activity. And so we could be seeing that happening as well if we think that it will be listed on the S&P 500 in the first quarter of, say, next year. There's all these impacts that are happening. They're all kind of bullish, but we need to be careful that it is trading at a premium, and whether or not that premium starts to come back, it could be quite painful since it's run up so high.
Yeah, those are all definitely great points. What do you think about their framing of BTC yield? Obviously, it's kind of referring to increasing Bitcoin per share over time. But I think historically, there's been a lot of people burned by the idea of earning yield on Bitcoin. Do you like that framing? How do you think about that?
Yeah, you're asking me, and behind the scenes, we run a couple of funds that do yield.
Fair enough.
One is institutional, and it's the first bank managed yield fund trading in digital assets. And so if you ask me, 2022, there's a bad name, but that bad name was this crazy stuff being done, right? You've got a Lunar Terror. It's like a very, flimsy mechanism, promising people 20% yield. You've got massive amount of rehypothecation. You've got people that are lending into things like Gemini, even, highly regulated. Coinbase wanted to do yield products. You wanted, obviously Celsius, this sort of stuff. And you don't know where that money's going. It's just being rehypothecated throughout the ecosystem. And that in the back engine room were just a whole bunch of degens doing crazy risk. And it went from one party that this is all illegal stuff in the TradFi world, right? And when we're talking about the TradFi world, we're talking about MicroStrategy, we're talking about institutional funds. This is heavily policed, and you cannot do this without disclosure if you're offering to retail. So absolutely, yield is this thing that is being dirtied by crypto in 2022. I think that word is going to be cleaned up in the cycles ahead. I don't think we're going to have another 2022 touch wood where, oh my God, we can do all this, in quotes, decentralized finance, bring it all to retail and do crazy crap behind the scenes to grab as much money as possible by hidden people. So now getting back to MicroStrategy, which is the question, framing of the word yield, if you're buying MicroStrategy at a premium, you could say I'm getting 1/3 of the Bitcoin, and I could get more to a shareholding, but I'm getting less than buying it directly. So I don't think it's actually yield. It's I think of it as if I'm getting more Bitcoin, if I'm getting more Bitcoin than what I paid and for the share price, that might be yield. Okay, that's you get that if you buy it at the bottom of the bear market when that premium is trading at 0.8, right? And then you might get a 25% yield if it's going back to 1 in the number of Bitcoin. Beyond that, you're basically getting a higher valuation for your shareholding, but no more Bitcoin. So you're just trading beta, the extra gain above the market, and that can collapse down to 1 or even 0.8. And so I don't think yield is something you take away with you, right? It's like fixed income, and you can do other things. So I don't think it's yield. It's beta, I'd say. But there's definitely much safer yield now. If you're like looking long term without this expansion contraction you might get in the bull bear, in basic arbitrage trades, the carry trade was talked about in the last cycle, where you can provide liquidity into the futures market because everyone's going long and there's a lot of demand on those derivative instruments to go long. So hedge funds will come in and they'll buy the underlying spot so they can't get liquidated, and they'll transport that spot liquidity to the futures market. And that was paying around 30-40% annualized in the bullish phase of the last cycle. And so a lot of managers can deliver anything from 10 to 40% annualized even in this cycle through this type of market neutral trading. And you can use that type of trading to either stack more US dollars or stack more Bitcoin if that's your collateral base. So that's a big thing that's happening quietly. I estimate there's $10 billion operating in market neutral trades across the digital ecosystem. And to get access to this, and predominantly you have to be a high net worth investor that is able to invest in a hedge fund. In the last cycle, everyone jumped the gun and said we should do this, but let's offer it to retail, which isn't really legal. That's like selling securities and being unlicensed. That was some of the problem with BlockFi, and then they rehypothecated it. So it ended up being DGN bets at Alameda, rather than actually doing the true market neutral trading. So this stuff is out there, and it is starting to roll out. And the interesting thing in this cycle is that the credibility of Bitcoin is post BlackRock is skyrocketing, and so we're starting to see banks come in and offer financing on your Bitcoin. Mortgage your Bitcoin, get some cash. Your Bitcoin's climbing at 20 to 80% annualized. Your interest rate might be 6% if you're tapping into TradFi loans. And so you get into an interesting situation where, even these yield products now, because they are actually shares in hedge funds, I believe by the next cycle will be acknowledged by banks as collateral, just like you can front your MicroStrategy shares or your Apple shares at a brokerage and borrow US dollars. I think both the Bitcoins and shares in these types of funds can be a way of getting a Bitcoin mortgage.
Yeah, that makes sense. Willy, you brought up how BlackRock has kind of brought an extra level of credibility to Bitcoin, and I do agree with that. When you first got into Bitcoin, did you ever think this would actually happen? Like, I guess maybe, you may have, but it's like, for me, like as it's happening, it's like a different level. It's like, wow, like BlackRock, discounted Bitcoin for so long. And then now Larry Fink is like on CNBC saying Bitcoin is bigger than government. How do you think about like how this has happened over the last decade?
I mean, it's funny. I was like 11 years ago, almost getting on to almost the month. Someone told me about Bitcoin, and I was looking at it through a technologist's lens, and I thought of it having a 12-year roadmap, having seen things like MP3 files being, pirated on the internet, to the invention of the iPod and then having digital music everywhere. Took about 12 years. And I thought of Bitcoin at that time in like 2013 as, very similar to pirated MP3s, very rough around the edges. You'd do a lot of work, had a lot of promise. And I figured, well, if this does do the digital gold that it's trying to be, I'll give it 12 years. So that's the 2025, right? At end of 2025. So, well, maybe it could flip gold by then, if that's the case. And back then I worked out it was roughly $500,000 Bitcoin. And that was the only reason I bought it. I just didn't buy much. I think I said, I'll just buy one coin. I think it was like $500 or whatever it was at the time. And I'll just get on with my life. Because I didn't want to be pissed off if it hit that and I saw it and it didn't happen. At least I have a $500,000 constellation price. So that was the start of it. And then later on, probably 2 to 3 years later, I'm starting to really get interested in Bitcoin. And you start to look at the data and say, wow, this thing is tracking. And if it succeeds, like if it flips gold, it's also flipping the US dollar. That means it's a global reserve asset. It could re-architect money. All these things fall out just from the number, go up, right, to that size. And then you can go back, all these things will have to happen. And it started to theoretically look real. Even 2015 to 2017, the numbers were so solid that back then it was doubling its adoption every 12 months. And you go, man, we're going to get to 1 billion people somewhere around the 2025. And so it just seemed outlandish. And so, yes, the numbers said this was possible. And the numbers said this is the best bet on the planet. If I said to you, you're allowed to put this dollar bet down, and if you win, I'll give you $100 or $1,000 back, or $10,000 back. And if you lose your $1. And the chances of you winning is more than 50-50. It's probably, by 2017, I would have put it at maybe an 80-20, 90-10. So it's like the best bet on the planet, and even today, we've still got at least a 10x, 20x to go. And the chances of it winning are, I think well north of 90%. So it's just a ridiculous investment proposition. And I agree, it's just really quite different to see it all happening. To see these guys like Larry Fink talk about Bitcoin as the future. I came back from Switzerland just last month and I posted, the chief investment officer of a boutique private bank. I go there every year because we're partnered with this bank. And last year we think Bitcoin is a really great investment. And here are the reasons why. 1 year later, the chief investment officer of this bank says, we think it's got the right properties right now to be the next global reserve currency. It's quite a radical statement for a bank.
Is your Bitcoin house in order for 2025? On December 10th, Unchained is throwing its largest online event ever with Tour de Meester, an industry veteran writing Bitcoin reports since 2012, and Unchained General Counsel Jeff Andrew, who has been working in Bitcoin since 2014. Learn what is next for Bitcoin from the people who influenced Michael Saylor and ensure your Bitcoin is secure for generations. Register for this free event now at unchained.com/2025-frontier to get your strategy ready before the new year. That's unchained.com/2025-frontier. And now back to the show.
Right, banker. And so you can see things flipping over. And my private banker there said, I don't believe in Bitcoin. That was last year. And he was like, I don't believe in Bitcoin. I just don't get it. And then 1 year later, he said, oh, I'm really bullish on it because he saw BlackRock was behind it. And he says, I know, I've been in wealth management for decades, his entire life. And he said, I know how exactly how this works. Like, this is now going to be offered to the high net worth. It's going to be off to the wealth management circles, and then it's going to be continually marketed, and there's no stopping it, right? The marketing machine's going to drive this, and so he said, "Oh yeah," he's now bullish, and that was a very quick flip from watching that for years to saying, "I don't get this stuff," to seeing a marketing engine for TradFi push it into wealth management. He's seen that through decades and going, now Bitcoin's on the offering, and to put that in perspective, it's I think Bitcoin's trying to get past 2 trillion, and there's about 900 trillion of total global wealth. So little of it's been allocated, and it's so small that any bit of wealth that comes in, you get a 2x, because you put 1 trillion in, suddenly Bitcoin sort of asymmetrically grows to another 2 million from the trillion you put in. So put 1 trillion in, it's 2, it goes to 4. And so it's going to grow quick.
Yeah, I definitely agree. I like the framing that you did where you said it's, we have 900 trillion roughly of global wealth, and then Bitcoin's just this tiny, less than 2 trillion thing. It kind of reminds me of like most people, at least my experience, initially learning about Bitcoin 2017, I felt like I was late to Bitcoin. I don't know if you felt the same way, but I feel like a lot of people feel that way. And it's like, no one's late to Bitcoin.
I was late 2013, early 2014 when I was looking into this, and I'm so late. I was looking up to guys like Charlie Shrem, and the Winklevoss brothers, who was only like their time of being very active was only like 2 to 3 years prior. But there was so much of that early story that was playing out between 2010 to 2013, and I was there at 2014 going, I am so late. But it was like geological time. If I'd been there another year or two early, I could have mined Bitcoin properly on my home computer with a few graphics cards. And it's totally different time. Yeah. And now it's like, BlackRock's opened up the door, but it's so early still. Like, no one understands what this stuff is. Like, the banker, the private banker saying, I'm not a believer, I don't get this thing, to I'm going to buy it because the marketing machines is being turned on. But that doesn't mean he's understanding just the long-term potential. Here's the thing that I've been thinking about recently is if you look at money over a broad time span, not like the next 4 years of liquidity, not the last 100 years, but I'm talking like the last 1,000 to 10,000 years of money. Really, we've been following multiple empires rising and falling. We had the current American empire, we've got the British, we've got Netherlands, Portuguese, French. There's a number of empires that have all rotated being the global reserve currency, but that's not it. That wasn't the money. Like, they were all traded back for gold or silver. And so really we've had thousands, up to 6,000 years of gold and silver having this trust of the world, of having some value, and then we based a currency over it. And then if you look at what with the US dollar since 1971, it's really just a liquidity crisis that happened, that there wasn't enough gold. They confiscated gold and shortly after Bretton Woods, centralized the gold standard onto the US dollar, and then all the gold you can get it, you can claim it from sitting in Fort Knox. And then somewhere along the way, they cut that convertibility because there wasn't enough gold. We can only guess that because there was never an audit on all the world's gold backing all the world's money. So it's never audited, which is outlandish, but there's a liquidity crisis. So what do? You snip it and you turn into fiat. There's no gold convertibility. And then Now people think this is money, it's fiat. No, it's not. It's always tying over liquidity crisis, like Germany did in after World War One. They had a liquidity crisis, and they went to fiat. They couldn't be on the gold standard, and they hyperinflated. And I think you go back in history, it's always, if you go to fiat, you're screwed, you blow up. And the whole world's on fiat. That's kind of a first, right? Like usually like one sort of empire, one kingdom goes into fiat, blows up, and everyone's on some sort of commodity standard, and they're good. But we're all on fiat, so that's probably why it's lasted so long. But can we go back to a gold standard? We can't, because gold's no longer going to be scarce in the future. Even if you draw the gold supply since the industrial age and then comparing it to agrarian age, it's our world on data. You can get that chart. It's on an exponential climb, right? And now we've got rockets that are being caught out of the sky that are double the power of the moon rocket, right? And so that thing there is going to get stuff into orbit for let's focus $10 per kilogram, where it used to be $10,000 per kilogram. And the threshold to get mining the trillions of dollars of, quadrillions of dollars of gold out in, out in the solar system is $100. If you can get the cost to orbit below $100, you unlock all the resources in the solar system. It might take a bit of time to get the technology to do that. But if we're looking at this 10,000-year view of money, that's just a blink of the eye. We can't go back to a gold standard. You can't secure something around scarcity using scarce atoms, because there's a lot of atoms in the universe, and all you need is better technology. The only way that we can have non-fiat money, which we know will disappear, always does. The only way that we can have non-fiat money is to use a new, you might call it a gold standard, but a new secure consensus that prevents someone inflating the supply. And the only way that you can do this into a technological age that goes exponential is to use energy. There's a funny thing about energy is no matter how high your technology is, well, the technology uses the energy to create stuff, goods and services, rocket ships, nice buildings, heating, food. So you're always needing more and more energy that grows with your technology. So if you can make the energy the thing that's scarce, then that's how you create a scarcity. And that's we've created that with Bitcoin. It's as an energy secured like digital scarcity. And that will not break with an exponential 10,000 years in the future. So that's how I look at Bitcoin, right? I think that's how we should look at it, has the right properties and the right design to be the money the next 10,000 years, whereas gold, before we had the technology we have now, gold was that. Atoms to secure scarcity is no longer viable in a post-industrial age. So the question is how long before fiat blows up? And given back to that original conversation of, back in 2013, I was thinking maybe it flips gold in 12 years, 2025. If it flips gold, it's basically flipping a 10,000-year reign of money. And we're looking, that's a big thing, right? We're looking now at, zooming out, maybe if we live that long as a civilization, we're looking at 20,000 years and right in the middle of transitioning from, something that you dig out of the ground to something that's purely digital, secured by energy. And incidentally, in 200 to 300 years, we're going to capture every bit of energy hitting the planet. And then probably 10,000 years in that time scale is where we start to have the technology to capture the entire energy coming off a star. This is called the Kardashev scale for people looking into sort of like the progress of civilizations. So if you look at that, it's a big thing, and we're just talking about this in real terms of maybe it'll do it next year. This is huge to me. And no one thinks of it like that. We're thinking about, what do you think about, the price of market strategy or its valuation versus the Bitcoin? But look at the Bitcoin. What is this thing? Yep. Study that. That's the thing that's important. And I'm telling you, people thinking of this as a reserve currency, they're getting closer. The fundamentals of Bitcoin are just like so solid. If you take a long time frame, and I'm talking over a 10,000 year view, it's happening so fast. It's like a phase change.
Yeah, I completely agree. I really like that framing of the 10,000 year view, because exactly like you said, like it is happening so fast. I mean, Bitcoin's been around for 15 years, if that, and it's already 5 to 10% of the way to like gold parity, and arguably Bitcoin could be maybe even better than gold. But like the fact that it's done that in such a short period of time is insane.
Yeah, the speed's phenomenal. But this is all technology. It's very disruptive and it happens very quick, but it seems slow as we're in it. Yeah. And it's not, maybe it's better than gold. It is better than gold, and without a doubt. Absolutely without a doubt. And, one of my favorite characters on Twitter is actually Peter Schiff, because he's so funny and is diehard, like saying gold is great and Bitcoin's crap. So, I mean that in itself is great marketing for Bitcoin, since he's got reach amounts of gold people. Because you can only be right for so long, and then people also look into, why is it outperforming gold? It's a Ponzi scheme. It does look like a Ponzi scheme when it grows, 10,000x over a short amount of time. But, so did Uber, so did Apple, so did Google, so did NVIDIA, like from 0 to 1. That's what we're looking at, a 0 to 1. We went from 0 and we're currently at 0.05 to be exact. We're like just under 5% worldwide adoption of this asset.
We definitely have a long ways to go. You brought up the chart, or like the general idea that we've had all of these like different fiat currencies over time, and they've rotated, country by country, over 100 years or so. Does the idea of like Bitcoin disrupting that, like somewhat, like it's exciting to me, and I think that it's going to happen, but I also kind of get a sense sometimes when Bitcoin is like increasing in value really fast, that it's also kind of scary, because it's like such a potentially radical change in geopolitics and money and like the global world order that I don't really know, how exactly it's going to play out. Do you ever get that feeling, or do you like, this is just good for the world, Bitcoin's going up?
Yeah, I get both. Yeah, I'm like, this is good for the world. Ultimately, how it plays out, I'm not sure. And I look, when we have like a change of empire, there's a lot of geopolitics that happen, and it's times of uncertainty and war. But that's not caused by necessarily it's not caused by necessarily let's say gold being gold. The empires geopolitically change power, and then they get to dictate their paper claim on the gold. So if anything, I think it's going to be more positive and peaceful with if it moves to a new kind of like a Bitcoin standard. At least Bitcoin's like Switzerland, right? It's neutral. It doesn't have a stance. Without that, then you're going to have geopolitics fighting over the money. I want to be the next reserve currency if I get that. I want the biggest military. And so the stakes are higher. And I think that like having a neutral party that does not have any nationality is going to make it better, not worse. So, I think there's hope. I think it's hope. Bitcoin is hope. But I think no one really knows how this is going to play out.
I agree with that. What are your thoughts on the U.S. Strategic Bitcoin Reserve, that proposal that I guess now has a much higher probability of happening now that Trump was elected president in the United States. What are your general thoughts on that?
I don't have a very in-depth and knowledgeable thoughts on that.
Yeah.
I think a million Bitcoin. It's kind of hard to believe that that's going to happen. Given the US has got currently the reserve status, I think if it gets threatened, and I don't think it's majorly being threatened right now. There may be, and then you're going to figure out the way in which it works, right? Because monetary policy is very different. So you have I don't know. I think that 1 million's not enough. If the US was serious, they'd go for 4 million. That's enough to actually. That's actually if the number to look for is if the US wants to accumulate 4 million Bitcoin, they're serious about switching the world to Bitcoin back to US dollar. Well, now it's a strategic reserve, but once you get down that path, you're going to accelerate the adoption of Bitcoin to the point it gets so big that it's almost like near inevitable that it becomes the next reserve asset or what backs money. If it gets to $20 trillion, I think it's going to be, and as the world goes into its fiat convulsions, I think there won't be much choice other than to go to a Bitcoin standard. And if I'm gonna do that reserve, 1 million Bitcoin, I think that we're going on fast track to make that happen. And if they're going to do that, then they should be going for 4 million.
Yeah.
Yeah.
I mean, I definitely think the US should strive to accumulate 4 million Bitcoin, for sure. Another topic that I think is interesting that I think people have talked about, and I kind of believed this last cycle, and I was definitely wrong in hindsight, but some people, question, will the 4-year cycles go away? Will the 80% bear markets disappear? Last cycle, like I said, I kind of thought that they might. I was definitely wrong there. It was close to 80% drawdown. What do you think?
I'll join you in being wrong, because I remember posting a tweet saying this is the last cycle. And the idea was that the cycles would be less extreme. And so it'll look like the cycles aren't even there, just, ups and downs. I've changed my view a little bit on it. I think that you can think of the Bitcoin cycle as a superposition of the two impacts. There's a halvening, which is creating a supply shock, push. So I think of this as like the bathwater, and you just push the bathwater and it sloshes. And there's in Bitcoin, sloshes are the resonance frequency. When you hit resonance, the thing slushes, and it's a 4-year cycle, and it gets a little push. You don't need much of a push. You just need enough push. That push is getting smaller and smaller. It's halving every 4 years, right? And now the inflation rate of Bitcoin has gone from the inflation rate of gold to now half of the inflation rate of gold. And so I don't know how much of that impact is going to be needed, because you don't need to push it that bathwater very hard, right? But eventually it's going to go away, and the push is going to go away, and it's going to slosh, and then eventually it's going to go away. But there's another push that's happening with Bitcoin. People possibly don't understand that one, and that is what we call the global liquidity cycle. That is, in basic terms, is the cycles in which all the nation states print money. And the bottom of this bear market was when global liquidity expanded, and most of that coming out of China, not actually the US. US started following, and then we kind of was trapped under like a consolidation of global liquidity. And then it broke to all-time highs and out running away to low money printing. And that happened like 2 to 3 months ago. Bitcoin tends to lag by 2 months of that global liquidity. But that sloshing of money being printed is also 4 years, and it's superimposed on Bitcoin in the right phase as well. So you can look at all the phases in which the money printers went on fast forward. They were also the screaming bull markets. And so So I think that that kind of little push from the halvening, because it's the resonance, it doesn't need to be a big push, and the global liquidity is going to be there until fiat dies. I think we're stuck in these cycles. Maybe it doesn't draw down as much because the machine is bigger. It's holding a lot more capital than last time. But yeah, I think we'll still have 40 cycles, but they'll be less intense because the amount of liquidity in the system, like as in people wanting to buy Bitcoin even when it's coming down, is increasing also.
Where do you think we're at in the current cycle? Yeah, is it still just getting started? Like, are we potentially going to hit gold parity maybe even next year, or is it already in the later innings? How would you frame it?
I'd be surprised if we hit gold parity this cycle. Who knows? I know my friend Samson Mao thinks definitely 1 million this cycle. And of course, he's going around the world convincing nation states to buy this as a strategic reserve. And so maybe he sees something I don't. I haven't actually talked to him on the details of that. Like structurally where we are, we haven't broken all-time highs. Sorry, we have, but we haven't broken the key 100,000. We broke the all-time high, but we didn't actually. Yeah, I think of us as still in this sort of reaccumulation phase of the market. You kind of get the bottom of the bear. You do this sort of burst upwards to confirm you're out of the bear market, and then it sort of chops around sideways as people reaccumulate coins, and then eventually it's full on bull market, and then you get the top and the first of the bear. Right, these are the phases I think of. We're still in reaccumulation phase. That's without a doubt. And in that phase is anything can happen. It can chop around wildly. We break all-time highs. Went from 70 now to almost 100 in no time flat. Consolidating underneath that by the looks. But sure, it can go past 100,000. We have our party, and then the whole thing could come back down to 70. All sorts of things can happen in the zone. Remember last cycle, it was like, whoa, we got past 10,000, everyone's feeling bullish, and then COVID hit and we dropped down to 4 very quickly, came back to 10, spent a lot of time at 10 before it sort of coiled up enough to really make its run. So the question is what happens when we really make our run, and when will that be? And it's certainly not right now. It's still, like, in my opinion, relatively safe to buy in this phase of the market and reaccumulation because it hasn't made its run. And I have a risk signal that we use internally for our hedge fund, but it's really measuring how much capital is flowing into the network, and then it's estimating liquidity conditions of the market. And the thing is, the risk, it measures the risk on that, right? So the risk of drawing down, and usually the signal starts to go to it's either a 0 to 1 signal. It's usually 0 or 1, and it's transitions very quickly. It's still at 0, and it's been 0 pretty much the entire cycle. That's why I knew that we would break our all-time high without a doubt. But once it goes to 1, you got a few months before the thing tops, and we haven't even gone to 1 yet. So still, I think we're still warming up. And of course, as everyone who's been following this knows, it's likely going to be in the tail end of next year before we get that full-blown bull cycle. I expect the risks to then start to climb as everyone goes DGN and everything starts to explode. But for now, it's still reaccumulation. Maybe we get past 100 before Christmas, but who knows? We're consolidating by the looks right now. Early signs on chain that, so you measure this with the profit that's being sold into the market by investors. It's a signal called SOPR. That's starting to peak. When that peaks, usually that means profit taking is happening, and we usually get consolidation. So like profit taking happening is early signs that might be happening right now. So time frame I'm talking about is over the next 6 weeks to next couple of months. If that starts to consolidate, whilst our risk signal is saying it's not going to come down too much, then it's a great time to sort of accumulate more under the 100,000 resistance. But yeah, the cycle is far from overheated.
Awesome. Yeah, that's kind of exactly what I'm thinking as well. It's going to be fascinating to see how the rest of the year in 2025 plays out. One last question, and we can close it out. What do you think is the biggest risk to Bitcoin?
Oh, right now, I would say Michael Saylor, tongue in cheek. It's centralization of the supply. I don't think the technology has risks, but you can fix that. The centralization and control of the Bitcoin by a few people would be the highest risk, because then it really undermines the next 10,000 year view, of where we want to be. We want to, inherently decentralized system that's inherently decentralized in its holdings. I think of MicroStrategy as a federated, controlled, supply, meaning that there's a pot of Bitcoin in there, and it's controlled with 45% voting rights from Michael Saylor and 55% by other shareholders. And we want that lower. As Bitcoin goes into that treasury and he issues more shares, he's going to be diluted down. Therefore, the voting control will be less and less. But it's still not ideal, because once you build such a big pot, it's a point of attack. What if it gets nationalized? The gold was nationalized in 1933. It was nationalized. What if all the gold in playing the MicroStrategy's playbook gets nationalized all around the world, actually? So yeah, it's centralization of control. I can't think of any. What do you think the biggest risk is, Joe?
I mean, that is an interesting one. I guess one that I've said for a while would just be like the fundamental cryptography, like suddenly breaking in like an irreversible way, and there's no fix to it. I think there's a very low probability of that happening, but still possible.
I mean, this is also the quantum computing argument, and we don't know when that'll happen, but if we can do it, it'll happen. And maybe that's 20 years away, but maybe it's next year. And you talk to Adam Back about this, and he'll go, well, we can just basically, if everyone's using it and so much is invested in it, well, the whole consensus community would be to move the consensus mechanism to this next thing. We've had chain splits before, and we've fixed them, and you can fix it, and it's messy. And Ethereum did this at the DAO. I don't think they needed to do it, but it was so early. But it's something so wide sweeping, like say quantum computers or AI figuring out how to do break the cryptography behind Bitcoin. It's a possibility. Well, we just have to agree as a whole community of holders and developers and the whole ecosystem. We're going to move to this new consensus mechanism. It'll be messy, but you can fix it.
Yep. Yeah, definitely. I agree. It's like as long as we have a little bit of a warning, which I think almost every scenario where this occurs, we can fix it. But if there's just like a sudden, like crazy bug in the underlying cryptography, which I'm not an expert in cryptography by any means, but maybe it's possible. And like tomorrow morning, everyone can just calculate the private key from every public key, then maybe that might be an issue. But yeah, I'm definitely optimistic, and I don't think that it's like I think there would be a lot of problems in the world, like the internet fundamentally breaking, nuclear bombs probably being hacked.
Screwed, right? We'll see.
Exactly. I think so.
Bright note.
I think the rest of the podcast was a lot of, you had a lot of great knowledge. And again, I think we're both optimists for the world and for Bitcoin. So I really appreciate you taking the time to do this. This has been awesome.
Well, thanks for having me, Joe. It's been great.